We make him feel very welcome. We have Steve Davis with us. Before we get to Steve, I do have a short presentation, just a little bit about Quest, a little bit of information about the new bill that is in legislation right now. I'm going to share my screen and then I'll hand it over to Steve, but we're so happy that you could join us with us today. Also on with us today is a fellow IRA specialist that holds down our Dallas office, Manny Lewis, or Emmanuel Manny Lewis. He's wonderful. He's in our Dallas office and he is just fabulous. So if you're in the Dallas area, Manny is your guy. All right, let me share my screen. I'm pretty sure this is the right one from beginning. I'm betting this is not the right one. Duplicate. There we go. All right, so thanks so much for being with us. So who is Quest? What do we do? So Quest was started by investors for investors, two brothers, Nathan and Quincy Long, over 15 years ago. So they were actually self-directed IRA investors themselves and truly built the company around the client experience, making it easy for our current clients now to do their investments and manage their account. They are all completely self-directed accounts, and we hold private assets like real estate, promissory notes, private entities, private stock, private companies, things like that. We do have over 20,000 clients around the country. So no matter where you're joining us from today, we would be able to help you. This too is actually probably closer to $2.2 billion under administration. So we're really excited about that. And 350, I need to update my slides. We're actually much closer to $400 million in undirected cash. So lots of opportunity there for borrowing and lending, those promissory notes, for y'all to network and get together. For that, our disclaimer, as always, for all of our webinars and classes, this is for educational purposes only. Quest does not give any legal, tax, structuring, accounting, investment, or any other professional advice of any type whatsoever. Educational purposes only. Make sure you are doing your due diligence on the people and the investments that you are getting involved with. Please make sure you are contacting your CPA and your attorney before entering your investments. Very important there. Do your due diligence. Okay, so we're not going to talk about this super long, but it is very, very, very important. I want to give you the kind of some main bullet points. And I want to also make sure that you know what you can do about this. So I'm sure that you've heard about the $3.5 trillion budget reconciliation bill making its way through the House. Has some things in there that can have some drastic changes on the investments in there. I'm not going to read these slides just to you. So one of the main things, and $10 million is going to be kind of the max they're going to allow. Now, this can be your or the combination of you and your spouse's IRA. They will make you start taking distributions to kind of, rein you back into that 10 million. Now you would have 2 years to do that. Yes, the income limit counts to 400 filing single, 450 as married jointly. So that's, one thing we're looking that would change. Same thing with the defined contribution plans, which includes 401ks and whatnot. Those are going to have to be the capped as well. This also, I do want to read this part at the bottom. The requirement of distribution or the required distribution would be mandatory regardless of age or tax situation with this $10 million. They do want to cap that. The backdoor Roth. Now, with after-tax contributions in a traditional IRA, where you have to file the 8606 to convert to the Roth, that's what they're trying to stop. The pre-tax money converting to the Roth, I think is still going to be okay. But the whole Roth conversion, they want to really, any after-tax money to change over to the Roth is going to be a no. Again, this is just a bill in progress. Nothing has passed, but definitely important information for everyone to know. I'm also going to put a link in here to a wonderful presentation that our CEO, Quincy Long, who is an attorney, did for some more information there. Also, if the security requires you to be of a certain type of investor, a certain level of education, like an accredited investor, those are proposed to be no more. So this would drastically change private placements or LLC investing in the IRA. They would have to be 100% distributed from the IRA and considered a prohibited transaction after that 2 years after 12/31 of this year. So that would affect a great many customer here. So definitely we don't want that to pass. So what can you do? Make noise is is really the big takeaway. Contact your senator, contact your local congressman. John Heyer is a very respected attorney. He has a website, handsoffmyira.com. I'll put that in the chat box. Or Manny, our moderator, is probably putting in the chat box now. Handsoffmyira.com, a very comprehensive website, has tons of details about the bill, how to get in touch with your local congressmen, your senators, a wealth of information there. So really make noise, take action. It really does take less than 5 minutes to contact those representatives. The Hands Off My IRA does have some language already written out that you can just copy, cut and paste. It doesn't take a lot of time at all. And even if you think this doesn't affect you, I don't have a $10 million IRA, I don't make $450,000. So this is kind of what they're doing now, but kind of what's next is what people are thinking is, well, what if they come for my 401k, or what is this next? If they allow this, kind of what's next? So you do have a dog in this fight. So, all right, I'm going to stop with the bill, but had to include it. It's very, very important. Make some noise, take some action. All right, enough about the bill, but very important, please take some action. Okay, so Sidra Socials, we are bringing some in-office events back to our Houston, Dallas, and office events. So the first Tuesday of every month will be at the Houston office. These are limited to 50 people in person. So make sure when you register that you really can come and cancel if something happens, so somebody else can join. It is a hybrid event, so it will be virtual as well. And we will have a speaker for education. There's going to be vendors there, so you can see other things. And we do have really great food at these. So the Austin office has theirs on the second Tuesday, 6:30 Central. And you can meet Manny in person if you go to the Dallas office on the third Tuesday. So there is our back in person Sidra Socials coming back. Of course, our additional classes and webinars, we do have these classes Tuesdays and Thursdays at noon, Saturday at noon. There will be a replay of Quincy's informational session that he did about the bill. I'm actually hosting that class. I'll be doing a short Q&A after that. Of course, I'm not an attorney, but I can answer some questions for you there. Our virtual networking happy hour, I hosted the one last night. It was so fun. We had 33 people on there, coast to coast, and a Canadian. We went international that only does business in the US. It was really fun. Come have a drink with us. Come meet some new people. See what kind of deals they're doing. learn even more about self-directed IRAs. And of course, YouTube. This is streaming live now on YouTube. I know Manny is going to put the link to our YouTube channel in there. So it's streaming live now. All the webinars, all the classes are on there, plus another wealth of information on self-directed IRAs is on there as well. QuestCon Live is coming back December 3rd and 4th. This is going to be a 2-day virtual event, high level information here. We're really digging deep. Topic this year is forecasting 2022. So 2021, just like 2020, was quite the interesting year. So that's where we're going to be diving down into. It's one of the few events that does cost money. It's $49. Tickets are on sale now. There is a way to get a free ticket. It's to open a new account. Contact Manny and I. We'd be glad to help you open a new account, get you a free ticket to this event. All right, how to get in touch with us. We're very easy to get in touch with. I forgot to put our emails in here, Manny. Manny's going to help us out and put our emails in there in the bottom. So you can scan this QR code, chat with us live on the website. It is manned by the IRA specialist. Manny and I are on here a lot. The transaction specialist. Give us a phone call. I love our phone number. We do like to make this fun. We are a bunch of IRA nerds, and we really do love this stuff. And we'd love to help you out. Or email us. There's our general email box, and Manny's going to put our email addresses in the chat box so you can reach out to us. All right, quite enough for me. Let's hear from the man and the topic of the hour, Mr. Steve Davis. Welcome, welcome, welcome to Quest Trust Company's webinar, and take it away, sir.
Thank you. Thank you so much for having me. I do want to stress that it is important, as she said, to take action. The congressmen, the senators need to know that we as Americans realize that these changes are bogus. So if you can, take action, go to that website and fill out that form or submit that form to our congressmen and senators. My name is Steve Davis. I'm going to share my screen right now. And let's see if I can get this right. And we're going to talk about understanding the value play in commercial real estate. The value play is the most profitable of the commercial real estate deals. There are basically two different types of deals. There are yield plays. This is where you buy property that's really in perfect shape. It's up and running. It's almost at full occupancy. And you get a low rate of return, 6-7%, maybe 8 or 9 at the best. The value play is a situation where you're changing the value of the property by rehabbing it, raising the occupancy, raising the rents, maybe adding new amenities and things like that. This is just a quick point. Ask yourself where money comes from. Money comes from one place and one place only, other people. If you want more money in your pocket, it has to come out of someone else's pocket. To do that, you've got to add value or provide a service to other people to deserve getting that money. The value play in commercial real estate allows you to help the most people, the most in the commercial side of real estate. It is a situation where we go in and we change the face of an apartment complex. It could be a self-storage unit. It could be a 6-story, 10-story commercial building, but we rehab them and actually change the value of the properties. These are my favorite deals. I've never done a yield play. I don't believe in the yield play. I'm only doing value play. Again, my name is Steve Davis. I'm a founder and lead consultant at Total Wealth Academy. My claim to fame is at age 27, I started real estate investing with bad credit and no money, and ended up owning and invested in 4,000 apartment units. Total Wealth Academy is an educational and coaching program for beginner and advanced real estate investors. We focus on apartments, self-storage, mobile home parks, hotels, mixed use, and more. It's important to understand, though, that 80% of our members are passive investors. They're using their IRAs, they're using their 401ks, they're using other forms of cash to invest in these deals, and they do nothing. It's a completely passive investment. Our students own over 20,000 apartment units and thousands of single-family rental homes. Our internal rate of return is nearly 20% on most of these deals. I have averaged somewhere between 19 and 20% for the last 20 years. Now, be aware what I'm about to show you is part of a 90-minute class that we teach all of our members before they join our group. We have 8 reasons that we chose real estate over all other vehicles. This is number 5 and 6. Number 5 is because of forced appreciation. Forced appreciation. If you go into the single family arena, the value of a home is based off of comparable sales. In other words, if you go and buy in a neighborhood where all the houses sell for $250 and you buy the house for $250 and you put a $40,000 kitchen in it and you upgrade everything in the house for another $20,000, you now have what, $310,000 in that deal. Guess what that deal is worth? $250,000. Not so with commercial property. If you take a little standard 30-unit apartment, the first thing you must understand is that you can have 2 identical apartment complexes sitting side by side. One's worth $2 million, one's worth $4 million. They're identical, but one is worth twice as much as the other, and we're going to discuss why. In this example, we took a 30-unit apartment that we picked up for about $50,000 a door. So that's a $1.5 million purchase price. Now, why so low? The reason is it was a piece of crap. This thing needed $400,000 in rehab. It had drugs, it had thugs, maybe a couple of prostitutes. So with our closing costs of $100,000, that also includes the holding costs to get it stabilized. Our all-in price is $2 million. The total out of pocket on a deal like this would be about 30% or $600,000. The first question most people ask is, okay, where do I get the $600,000? Well, you could use personal funds, or you could get with Quest, self-direct your IRA or 401k without tax or penalty. You could get it from friends or relatives. I've even seen people buy apartment complexes with credit cards. You also might have a bunch of dead equity in your home not serving your family. Where do I get the $600,000 when I do a deal like this? I partner with other members of Total Wealth Academy. In other words, 6 of us might get together. Each of us put up $100,000. That's where we come up with the 600. And then one of us is going to manage the property and run it. The other 5 do nothing. They're passive investors. Now let's talk about how commercial property is valued. It is not based off of comparable sales. It is based off of net operating income, or NOI. To determine the value of a commercial property, all you do is you take the NOI and divide it by the capitalization rate. Now, I've been in all-day classes on cap rates. I've been in this business for 30 years. I do not know how to explain cap rates any other way than this. The bank determines the cap rate, because people will say, well, it's a 4% cap rate. Yeah, but no bank's going to finance it at a 4% cap rate. So who cares? That's useless. That's a useless number. In this particular case, this is a high risk deal to the bank. To me, it's a low risk deal because it's in bad shape and I can fix it up. But to the bank, banks know nothing about real estate, running real estate. They see this as a high risk deal because there's drugs, thugs, prostitutes, low rent, high vacancy. So what they say is, hey, we want a high capitalization rate on this deal. So in this case, they gave us an 8% cap rate. The $160,000 is the NOI, the net operating income. The cap rate is 8. So you divide $160,000 by 0.08, and that gives you a value of $2 million. Well, we're buying it for $2 million. The bank thinks it's worth $2 million. So they agree to loan us the balance minus the $600,000. So our action steps, the moment we buy it, are we remove the drugs and thugs, we rehab the entire exterior, we rehabbed all 30 interiors, we leased all the vacant units, we raised the rents to market rent, and we added a laundromat. Now think deeply about that. What is that going to do to the net operating income? It's going to increase it, isn't it? We've increased the rents, the occupancy, added a laundromat. So what we have is a new NOI and a new value. But watch the cap rate. Our new NOI is $240,000. But look, the bank lowered the cap rate. Why? Is this a high-risk deal to them anymore? No. We've rehabbed it. It's fully occupied. It's in perfect condition. We've got great tenants. They see it as a low-risk deal. So they gave us a lower cap rate. Well, that gives us a new value. In this case, $240,000 NOI divided by the cap rate, 0.06. The new value, remember we bought it for $2 million. 18 months later, the thing was worth $4 million. We then refinanced it and pulled out $1 million. Now, I want you to think about this. You'll see two rates of return there. 167% rate of return if you had put up the whole 600,000 yourself and managed it yourself, you would have, that's 167% rate of return. If you were a passive investor in this deal, it is 125% rate of return. And guess how much tax you owe on that 125% rate of return? No tax, because it's a loan. Think deeply about that. If that's a little bit confusing, I'll open up for questions at the end. Total impact to you and your family is this. If you had put up the whole $600,000, you would now have $1.6 million equity in the property, $1 million in your pocket. You turned your $600,000 investment into $2.6 million worth of equity and cash. So what you want to understand is the magic formula. For every $1 that you increase your NOI, you increase the value of your property by $17. Think about it. If you raise the NOI by $100,000 a year, what have you done to the value of your commercial property? You've increased it by $1.7 million. Do you see why on a 500-unit apartment complex, raising the rent by just $10 a month makes millions of dollars of value add? It's insane. And we're doing this all the time. This is what every commercial person, Donald Trump, all these people that you watch get wealthy, this is all they're doing. They're changing the NOI, improving the property, serving the families more effectively, and as a result, increasing the value of their property. So again, that $100,000 translates into a $1.7 million increase in the value. So there's the fifth reason that we chose real estate over all other investment vehicles. It's because we control the value of our property. We don't wait for it to go up in value. We control the value. The sixth reason we chose real estate is because of the tax advantage that comes along with it. Let's first look at depreciation. Take one of our self-storage complexes. If we make $200,000 cash flow, We may have $160,000 in depreciation. That means even though we pocketed $200,000, we're only taxed on $40,000. So think about this. If you had 80% of your taxes back in one account, what kind of financial position would you be in? It's different, isn't it? Your life would be different. Let's take it one step further to the 1031 exchange. If we sell a property and make $2 million profit, do we owe taxes on that $2 million? Yep. Are we going to pay it? No. What we're going to do is we're going to take that $2 million and go buy more real estate with it, a bigger property, and we get to keep every dime of that $2 million working for our families. So what if you had all of your taxes back in one account, working for you and your family? What kind of financial position would you be in? It's quite different, isn't it? So again, that's the fifth and sixth reason that we chose real estate out of 8 reasons total. If you want to see the full presentation, I'll give you an invitation at the end. Let's move to the next slide. This one is touchy because I've got to ask you to ask your financial, if you've got a financial planner, I want you to ask them these 2 questions. Do I lose money in a down market? The second question is, do you still get paid when I lose money? If they answer yes to either of those questions, you need to fire your financial planner and come see me. We make money in both the up and down markets. Guess what we're praying for right now? A real estate crash. The stuff that's going on in China right now, I love it. We make more money in the down market than we do the up. Now, don't get me wrong. We make a lot of money in the up market, but in the down market, we make probably 2 to 3 times as much as we do in the up market. I remember when 2008 hit, I had 11 apartment complexes. Those 11 apartment complexes dropped in value 25%. Did I care? No. What happened to my cash flow? It went up. The rental rates went up in 2008, 9, and 10. Those 11 apartment complexes cash flowed better in 8, 9, 10, and 11 than they did in 5, 6, and 7. We make money in both the up and down markets. So that makes real estate the safest and most effective tool that you can use to build wealth. And I'm going to leave you with a thought, because a lot of you are thinking about self-directing your IRA, your 401k, or whatever. I want to encourage you to get with Quest and do that. It is the greatest thing in the world, because most people's IRAs and 401ks are sitting in garbage like mutual funds or the stock market. You need to have your money somewhere where it's safer, and you need to have your money somewhere where you make money in both the up and down markets. And what your goal is to build a second stream of income that meets and exceeds all your bills and your wants. Remember, you don't just want to pay your bills. You want money for romance, for travel, for all the fun things in life too. And I want to show you something from 40 plus years ago. Warren Buffett said, never depend on a single source of income, invest to create a second source. But how many of you, before I said it, were told to build a second stream of income? Very few people, but that's the secret. 95% of Americans fail to retire by age 65. They're either dead or dead broke. The 5% who do retire successfully, guess what they all have? Second streams of income. Some of them third, fourth, fifth, and sixth. So there's my sales pitch for get a second stream of income and use your IRA and 401k to create it, along with whatever other funds that you have. So again, those are all excerpts from a free workshop that we give. If you'd like to see the full presentation, go to gettotalwealth.com and click on the free sample class there. That's gettotalwealth.com and just click on the free sample class there. Now I'm going to stop sharing my screen so that I can answer a few questions before I have to get on to the next webinar. So Nicole, are you there? Can you give me some questions?
Hello, guys.
Hey,
All
Nicole.
right. Thank you, Steve.
Thank you.
That was amazing information. I know that you are on a time crunch yourself, but we do have a couple of questions. What would be your golden nugget of advice for anybody kind of starting out doing this?
Starting out? Well, it all comes down to education. The key to real estate investing is that it's not taught in high school. It's not taught in colleges. So you have to get it on your own.
Yeah.
That's what we do at Total Wealth Academy is we teach people how to invest in real estate, but we're not the only platform in town. Pick one that you like with a leader that you're comfortable with and join a group, get around other successful real estate investors. That changed my life.
So are you talking about RIA groups or just other?
It's gotta be one. There's some that are just purely networking. You want ones where you can go put some money up and buy the education.
Got it.
Not just one where you're networking. I'm a member of both types, but I spend 30 grand a year. So the highest I've ever spent was 75 grand in 1 year on continuing education.
Wow.
I've made so much money from that. It's a drop in the bucket.
So really investing in yourself.
Yeah.
That's wonderful. What kind of stuff would you say you look for kind of in your starting? Oh, Quest saves electricity with the automatic lights off. What would you say that you would look for kind of in your in your first deal? You're kind of nervous. You're not sure if you're going to pull the trigger. What would be some things that you look for? Okay, I feel more comfortable doing this because I've kind of checked these boxes.
Well, that's a tough question because that list is about 20 to 30 pieces of information.
Sure.
But what happened with me, I had a mentor beside me. I'd paid him good money, but I had a mentor that I picked up the phone and I called him. I go, man, I'm scared to death of this. I'm scared to death of that. I don't want to take action. And he would go, hey, relax. This is what you do. We're going to solve that problem. So get somebody on your team that will walk you step by step through the deals. That's how I got past all my fears.
I like that. Finding a mentor, somebody that's done it for a while, that's probably made the mistakes already and learned from them. I really like that.
Let me tell you a quick story.
Please.
One time I was going to buy this fourplex and it was at the beginning of my investing career. And I walked into my mentor and I go, I can't buy this. And I gave him 10 reasons why I shouldn't buy it. He looked at the deal and goes, okay, do me a favor, just sign that deal over to me because I'm going to close it if you don't. Guess what I did? I closed it.
You closed it and didn't give it to him.
Because I knew if he was going to do it, I should do it. But you need somebody that's in your face that's going, do it. Don't be afraid or be careful. It's okay to be afraid. Do it anyway.
Got it. We do have another question. What was your biggest learning curve and how did you overcome it?
This is a long story, but my very first apartment complex was a little 10 unit and I had 100 single family homes. And my ego told me, oh, if you can run all those homes, you can run a little tiny apartment. That's no big deal. I got killed. I didn't know how to deal with apartment people. I didn't know the laws. I didn't know how to manage an apartment. I got killed. It took me a year to stabilize the property. And the way I got over it is I hired a mentor who owned apartment complexes to just kill me. I mean, it was like a week-long boot camp. He put me through so much information, had me read multiple books. I had to take the Houston Apartment Association classes. It's always going to fall back on education. When you make a mistake, be humble, admit you made it, but do not beat yourself up. You ever heard of shoulding on yourself? I should have done this. Don't should on yourself. Just admit you made a mistake, go get the education to solve the mistake, then keep fighting and move forward.
I like it. We have one similar question. I know you're on a time crunch. If you have a few minutes,
I got 5 more minutes.
Okay, good. So this will be our last question then. So what was your most profitable deal? What made it more profitable? And what was your worst deal? How could that have been avoided?
The best deal was a 216 unit up on 290 and 610 in Houston. And that one got me about an 85% rate of return the first year and pretty consistent 20% after that. I don't know the percentage when we sold, but we made a big chunk of money when we sold it as well. That was definitely the best deal. The worst deal was the 10 unit that I told you about, because again, I was lazy. I didn't want to take a course. I was arrogant. I thought I knew what I was doing, and I was greedy. I didn't want to pay for more education at the time because I didn't realize how valuable it was. And that one hit me. What I would do different on that one, I would have been more humble, and I would have gone ahead and paid that guy to teach me how to run the apartment before I bought the apartment.
Wonderful. Well, thank you so much, Steve, for being here. One more request. What is do you mind putting your contact information in the chat box? I'm sure people will want to reach out to you.
Absolutely.
Ask questions, hear more stories. But I really love what you said about, the foundation really being education, finding that mentor. And it sounds like you absolutely put your work in with all of the classes and the continuing education, reading all of the books. I mean, that truly is a commitment, time commitment, a financial commitment. So I can't thank you enough for being here today.
Thank you.
Wonderful. Thank you so much for putting in your contact information. So guys, I'm going to leave this up for a while to make sure that you can get in touch with Steve. Manny, if you wouldn't mind putting our contact. Oh, Manny, you are on top of it. I didn't even get to finish the sentence and it was up there. So guys, thank you so much for being here with us in this webinar on this beautiful Thursday. We appreciate you joining in. We will be back Saturday at noon for another webinar, and of course next Tuesday and Thursday at noon. So thanks everybody. We really appreciate it. Have a fabulous rest of your day. Bye from Quest, guys. Have a good afternoon.